This quick demonstration will show us how we're going to dissect this suburb in question, which is Chatswood in Sydney, on a street-by-street basis to work out the exact areas and streets within Chatswood that have the highest potential matched against our strategy. And in this case, for this example, our personal strategy is going to be capital growth. So we've come across Chatswood. It's got very good capital growth fundamentals. It's in the 85th percentile of capital growth for capital growth in New South Wales. It's better than 84%. It ranks higher than 84% of suburbs on that measure. So we have come into Chatswood with a capital growth strategy in mind. We can click on the detailed strategy analysis button there to have a bit of a sanity check that's around what are the fundamentals of the suburb, why is that recommended so highly, does it check out? If it does, what our next job is to understand the suburb like a local would. So what are the areas in Chatswood that are going to have the most potential for capital growth? Now when we're doing this analysis, a capital growth street is one that has higher than average rents, higher than average incomes, low or very low public housing, basically no public housing, and higher than average, very high to higher than average percentage of renters. Now the reason why that occurs, one of the reasons why we've been attracted to Chatswood in the first place for capital growth is because rents are going up per week over the previous quarter. We want to be investing in, that's a leading indicator of capital growth as far as a suburb when it's teamed with sales volumes increasing. So we want to be investing in the areas of Chatswood that actually achieve the highest rents per week, because this means one of two things. It's either home to the most expensive properties that do achieve very high rents because they are 6 bedrooms, or it means this is where rents are going up and very high rents are achieved because it's quite a standard of a normal standard of property, but it's just where the most rental demand is. So we want to be looking for the second type of high rent areas, very high rents per week or higher than average rents per week, when also teamed with high percentage of renters, means that it's generally a common or most common type of property, because higher percentages of renters are demanding the most common types of property, which would be the most likely streets and areas to be really driving rents increases throughout the suburb, and therefore price growth attached to that rental increase. So this is going to, basically our job now is to find those streets and areas that are rated for capital growth or have very strong potential for capital growth. First way we can do that is very quickly and easily selecting the strategy toggle over here. That's going to display overlays on the map here. The green overlays, there's 12 areas on the map, areas that are most relevant for flipping. The blue areas, what we're looking for, are the areas that are most relevant for capital growth. Two very different things. Flipping, we're looking for owner-occupiers. Capital growth, we're looking for high percentages of renters with higher than average rent and incomes per week. So there's only 5 areas that satisfy that. It's a strict requirement. Sometimes you might come into a suburb and the suburb has excellent capital growth potential. It ranks very well against other suburbs, but there's actually no areas or streets in the suburb that have the stars aligning and one particular zone or multiple particular zones are recommended for a capital growth strategy based on those criteria. So those criteria, again, I'll zoom in on the map here. It's nominated 4 areas of interest in the blue here for capital growth. We can see an orange area here which is recommended for cash flow, which will be high yields. But the blue area, let's click on it. Let's have a look. It's got 0% public housing, 71.7% rental density, 100% units, 4% yield, and $615 per week rent across versus $1,365 as the average gross income in the household. Okay, so that's all. It all seems great on the surface. It's been recommended, but how does that stack up against the suburb overall? We can, for each of these things, just a reminder, for an area to be recommended for capital growth, we need to see high rents, high incomes, high percentage of renters, and low public housing. So let's look at those things individually, and we'll get a bit of a feel for how these areas stack up. So coincidentally, all the blue areas border each other. So this is an area cluster of the suburb that's very consistent, very much the same, and all of it is satisfying good potential for capital growth. So to start with, let's have a look where the public housing is. Anywhere that's shaded in the red is above 0% public housing. So there's no red shading in the area we're talking about at all. So 0% public housing. This area, as an example, has just under 15% public housing. So that wouldn't be recommended for a capital growth strategy, just because higher instances of public housing lead to lower street appeal and potentially lower standard of tenancies, more instability around the tenancies, which is something we want to avoid when we're looking at short-term to medium-term growth. We want to be on the real cusp of things moving forward. So next thing we want to look at is occupancy type. We remembered that we want higher than average percentage of renters in the area. If I zoom out, anything in the green is above average concentration of home owners. Anything in the yellow is above average concentration of renters. So the average in the suburb is 37% rented. Anything above 37% is in yellow. The stronger the yellow, the higher the number of renters. So as we say, this is actually 71% renters. So it's going to be a lot of demand there for other people wanting to rent in the suburb, in that particular street and area. A lot of consistency and demand results in low vacancy rates and the potential for you to be able to push the rents up and lead the pack as such as far as the suburb overall. So we've got a feel, this is really in a cluster of high percentage of renters in Chatswood. Coincidentally, it does seem to run very closely to the main arterial route to the city, so renters congregate along this road. You wouldn't want to deviate too far from there. Property type, anything in the yellow is predominantly units, anything in the green predominantly houses. Higher than average rents, anything in the purple is higher than average. Anything without an overlay colour is below average, so we're in the purple again. Same for incomes. Anything in purple is above average income. There's quite a close correlation between the two. They are the same colour to show that correlation, and we can see yields on the suburb. So anything in the yellow is higher than average yields. 5.1% yield over here, 5.9% over here. However, we've got definitely reasonable yields through the middle here where we're looking at, so 5% yields in this particular street. The street over the road, coincidentally, is only 3.2% yield, and this one is only 3.1. So you can get a really good feel for how the yields change across the suburb, which is really important. Okay, so what we've done is we have got a really good feel for the suburb overall. This is how I see it. It's a cheat sheet. The strategy toggle is a cheat sheet. We take the time to work our way through the toggles individually and get a really good feel for the suburb dynamic. However, it's all put together into an assumed formula for finding streets and areas that match a capital growth strategy. If you buy in and agree with the assumptions made for the requirements for those streets and areas, if you do, it's a really nice shortcut to see the blue areas that are really primed for driving the whole suburb's capital growth forwards. If you wanted to filter properties based on their location in these capital growth areas, we can click on filter properties and we can click on the capital gains filter here. So it will only display properties that's located within this little sweet spot in the middle. That's all. I'm going to do a quick run through in separate videos for let's finding flipping areas and let's find cash flow areas in a suburb. But this is an explanation about what constitutes areas that are ripe for capital growth and really driving the suburb forward. So we don't want to be investing in the dead spots. We want to be investing in the areas that are driving the capital growth of the whole suburb forward and really leading the pack.